In this week's Fastest 4 Minutes in Finance, an important reminder that after you cast your vote, stay invested. Hello, and thanks for joining us this week. I'm Scott Inman. Election Day is Tuesday, and millions of Americans have already cast their vote in early voting for president. On this segment, we have repeatedly told you this year that mixing your politics with your investment strategy can be disastrous. We're going to use this final segment before the election is over to drive home that point again. Here's a simple chart from Invesco. It shows the growth of a $10,000 investment in the Dow Jones Industrial Average going all the way back to 1896. The dark blue line represents growth if you were only invested during Democratic presidential administrations. The light blue line represents the growth if you were only invested during Republican presidential administrations. And the gray line represents the growth of your investment if you were in the Dow all the time. You can see you would have about $10 million if you wrote out all administrations, and you'd have less than a tenth of that if you only invested when the president was a member of your favorite party. Now let's take a look at a more specific chart. This shows the annualized performance of the S&P 500 during every presidential administration since Eisenhower. It also plots that number on a graph and compares it to the annualized GDP growth during those same administrations. You can see the stock market was negative under only two presidents, George W. Bush and Richard Nixon, but GDP grew under every president. This shows that the economy has gone through cycles, as it always does, but has grown under all administrations. Stock market has grown at an annualized rate of 10% or higher during 11 of the past 13 administrations. It's worth pointing out, too, what was happening during the two administrations that it didn't. George W. Bush was at the helm during 9/11 and the Great Financial Crisis, and Richard Nixon was in office during the Vietnam War and during a period of stagflation when inflation and unemployment were high. Yet GDP still grew. And it's growing now. The Commerce Department released a report just this week that announced the U.S. economy grew at a 2.8% annualized rate in the third quarter of the year. Consumer spending was up 3.7%, which represents about 70% of economic activity. We can certainly have our political opinions about who will do the best job at keeping the economic engine going, and policy does matter in that regard. There is also more to consider when you cast your ballot than just the economy and the stock market. Your vote matters for the future direction of our country, but just remember, when you've cast your vote, your financial independence does not depend on who is in the White House. It depends on the decisions you make in your own house. Thanks for watching. Want to become smarter financially in 4 minutes or less? Sign up at fastest4.com to get insights and updates like this delivered to your inbox weekly.